Hello, everyone. Another tax planning strategy uh, suggestion video, I guess is what I would call these things. Today, I want to talk about bookkeeping and the importance of it and a couple of items about bookkeeping. So, we are in the middle of extension season right now. I'm getting a lot of people sending in their stuff for tax return preparation. And a lot of people pay me for tax return preparation. That's what you think I do. Like you think I'm doing your taxes. In reality, the tax return itself might be the actual thing that I'm giving to you that looks like what I'm doing for you, and that's what you're paying for. But in reality, it's not. The tax return is just the final cover sheet to a huge list of items that go together to create a case file. Everything I do is audit protection. And that comes from the fact that we try to take aggressive tax stances. In other words, I'm interpreting tax law aggressively and providing you with that value. And my goal in life, or as a CPA, should be that I'm actually saving you more money by working with you than you pay me, right? Like that's my guarantee. Typically, is that I will save you more money than you will ever pay me. Otherwise, what's the point of working with me? And that comes from two things, really. That comes from tax planning strategy, uh, which is when we have an initial consultation. We talk about how to get aggressive on business expenses. We redefine business expenses, and we talk about ways to turn personal expenses into business expenses. But that really all is manifested in the tax return itself. But the tax return is just the cover page. It's what we file with the IRS, and it's backed up by an entire case file that we keep in the event of an audit. And in an audit, it can either go favorably or unfavorably for you. And it can also go in fees, like whether you're paying me an attorney or your personal time, or somebody else to represent you. It can either go low cost or it can go high cost. And a lot of that has to do with the bookkeeping, not necessarily the tax return itself or the stances that we took on it. Because a lot of the stances we take are available in the tax code, but you have to show that you're doing things correctly. And really that comes down to the bookkeeping. So we take, when we do a tax return preparation, we take files from different sources and we create a case file that verifies all the information that we're putting on the tax return. And honestly, in an audit, very little time is spent looking at the tax return itself. It's all spent in the accounting records. And so it is very, very important to have good, robust accounting records. A lot of people feel like accounting records are just something I think I'm required to do, something that really provides no value to me, and I'm going to blow it off. Because when you're running your business, that's how we look at things. We look at the financial record keeping as well. There's money in my bank. I'm making money. I feel good. I have a gut feeling I'm going to keep running my business. That's how we run business as a small business. The accounting records don't really provide you a lot of value in day-to-day decision making. And that's fine. I get that. It's the same way I run my own business, my firm. I very rarely look at the actual accounting records to glean information from them. That's what big businesses do. That's what Fortune 500s do, because they have CEOs and CFOs that don't even know how to actually do what the business does. They know how to manage business based on financial records. But like, for example, the CEO of Microsoft isn't a computer engineer. I mean, he might be, but it's highly unlikely, right? You probably have some computer engineering experience, but if you were to actually sit down and do computer engineering, he'd be so slow and painful that he'd get fired. He'd fire himself because he's experienced in looking at financial statements. But we don't do that as small business owners, because as small business owners, we do our actual business. And then the financial record keeping and financial decision making comes secondary. And so we don't take a look at the bookkeeping at the level that it's actually providing for you. For example, I've been through a couple audits. I've been through actually quite a few audits, some as a staff accountant working at bigger firms, and some as audits of my own clients in this firm. And 90% of the time is spent in the QuickBooks or in the bookkeeping or accounting records when you do an audit. And so when we do a tax return preparation, that is the primary source of information is the accounting records. And if you have, we like to say garbage in, garbage out. If you give me accounting records that aren't robust and done correctly, you might get a good tax filing that you feel happy about, like you feel like you don't owe very much in taxes, but I guarantee in an audit that is going to come back and bite you hard. For example, in an audit with good accounting records, that might cost you a couple $1,000s in fees, whether that's to an attorney, to me, or somebody else representing you, or your own time. If you were to place a dollar sign on your time where you're representing yourself, good accounting records will limit extremely the amount of time that is actually put into an audit. So it's going to save you audit preparation or audit defense fees, right? And then good, robust accounting records are also going to provide a higher level of defense in negotiations or in changes that the IRS auditor is going to make. So your QuickBooks costs you something like $40 a month, $40 to $60 a month, depending on the subscription. And then bookkeeping itself, even if it costs you $200 a month, $300 a month, or just a couple, $100 a month, is still cheaper than what's going to happen if you end up getting in an audit and you don't have good record keeping. So the auditor can see right away if your record keeping is good or bad. And when they see that, they start asking more questions and they start going down the rabbit hole. And then they start wanting to see receipts, and they start wanting to see all these things that increase your audit preparation time, or your audit, the time that the representative is putting into it, that you're going to be paying them for. And so a $2,000 audit will start going up to $5,000, $10,000, $15,000, depending on how much you're willing to fight this thing, instead of just accepting whatever the IRS says. And then at the same time, you could end up with a $50,000, $60,000 adjustment. And that's what I've seen in small businesses. Very small businesses making $50,000 a year in profit could have a $50,000 adjustment that results in $25,000 in additional taxes. Now, just multiply that by the size of your company. You're a $200,000 company, you could expect a $100,000 adjustment. If you're a $300,000 or $500,000 company, expect about half. If you have poor record keeping, you can expect about half of whatever your profit is as an adjustment that you have to either defend or accept, or negotiate with. And so your audit could go from a $2,000 easy defense to actually costing you $50,000 to $100,000 between fees to your representative, tax adjustments that result in additional taxes due, and then interest and penalties. And so if you're paying $40 a month and it takes $100 a month to do bookkeeping, that's $140 a month. 140 times 12 is $1,600, $1,680. $1,680 a year could save you over $50,000 if you get audited. It's such a, to me, the risk is minimal. Like the risk of an audit is minimal, but the pain that is the result of an audit is so expensive that small $1,600 fee a year can completely eliminate it, all but eliminate. And so good, robust record keeping is very, very important. And it's usually an afterthought as a small business owner. But, and a lot of us think, I will worry about that down the road. But hiring a professional bookkeeper to keep your books for you will save you so much pain in the long run. And then the next thing I want to talk about, so good, robust, properly kept books is vitally important when it comes to a defense and an audit. Hugely important. And I guess you could count this as a sales call, I guess, type thing. I'm trying to upsell people into bookkeeping. I frankly don't care who does the bookkeeping as long as it's done correctly. You can hire bench, you can hire somebody from India, you can hire me, you can have your great grandma do it. I don't care as long as they are a professional bookkeeper and know what they're doing. And I've hired people from India and I fired them because they don't do a good enough job. So you can pick who you want to use. That's fine as long as they're done correctly. And correctly means reconciled to the bank and credit card accounts. That's what. So we file all our taxes. All our clients are filed on cash basis, which means cash into the bank account, that's revenue. Cash out of the bank account, that's an expense. With a few nuances that we find in the bookkeeping, and record correctly in the bookkeeping. And so you record that in QuickBooks or whatever software you're using, and then you tie it through a bank reconciliation or credit card reconciliation directly back to a third-party report, the monthly statement, PDF statement or paper statement from the actual bank account. And that's what the IRS wants to see in an audit instantly. They want to look at your reconciliation reports to see, are you doing that? And they can see that within 10 minutes of starting an audit. Because that's the proof that whatever passed through the bank account, whether it's cash in or cash out, got recorded in the books. Now, it might be misrecorded in the books, and that's why they start digging deeper into an audit, but that's the first thing they look at. And if they look at it and they say, hey, these reconciliations aren't done, this whole thing is garbage, we don't want to look at it. Now we want to start seeing receipts, we want to see we actually want to see bank statements. And they start going down this rabbit hole of pain. And in the end, they might not make any adjustments at all, but you're paying the fees for somebody to represent you and all of that time to continually collect all this information and give it to the auditor. So record and classify transactions and reconcile directly into the bank account. There's a bunch of other things that go on with bookkeeping, but that's primarily what I'm looking for, and that's what I expect out of bookkeeping. And that is our number one case file that goes into the audit defense file for your tax return. If you don't give us good files, we don't have a good case. And I'm hesitant to represent you. And I will fire clients because they don't keep good record keeping. And I have. There's thresholds involved in all of that and risk decision making. because I can get targeted as a paid tax preparer. I have an assigned number from the IRS that goes on every single tax return that I file. And if the IRS starts seeing specific things about me, they will target all of my clients. And then I become risky. And so I have to manage my own risk by managing my clients. Anyway, so that's correct. Bookkeeping is vitally important for audit defense. It might not be important for management of business at your level, but it is vitally important for audit defense. And so if you never look at your QuickBooks, that's fine. Allow me to do it, or allow us to do it, or hire somebody else to do it, but have robust accounting records for that good audit defense. And then the next thing I want to talk about is the importance of what you are running through your business bank account. So I've said this over and over again. We are a corporation. We're all filing as S corporations. If you're not, you're going to be shortly in the future. Well, as a corporation, you're a shareholder in your corporation. Same as if you were to buy stock in Microsoft. Microsoft doesn't say, congratulations, you just became a 1% owner in our company. Here's a credit card that you can use to cover your personal living expenses. Nor do they come to you and say, okay, thank you for becoming a shareholder in our company. We want access to your personal bank account so that we can cover our operating expenses on your dime. They don't do that. There is a complete separation between the corporation, Microsoft, and you as a shareholder. And the same thing has to happen with your own business. We have to separate personal transactions from business transactions. So what does that mean? I will also tell you that we've talked about what is a business expense. And as small business owners, 90% of our lives are our business. That's what we do all the time. We're not just W-2 wage earners that come in and punch our time card from 9 to 5. We're working on our business at 2 in the morning. We're working on our business at midnight. We're working on our business at 2 in the afternoon. Like, we're doing it all the time. We're going out to eat with somebody. That's a business expense, right? So that 90% of our expenses should then be business expenses. That's fine. But there is a small portion there that is not business expense. Pigs get fat and hogs get slaughtered. You will get slaughtered in an audit if you are trying to take business expenses that are blatantly personal. For example, pet supplies, veterinary expenses, video game purchases, right? Like Microsoft Xbox subscriptions and other things, other like entertainment type things that you do in your personal time to unwind, relax, not focus on business. Candy bars, right? Like there's things that are definitely personal. Well, one of the things that is always personal first is your living expenses for your home. So internet and phone are definitely 100% business. The IRS ruled on that years ago. It's immaterial to allocate. Rent or mortgage payment for your primary residence, utilities associated with that primary residence, HOA, repairs and maintenance, unless it's 100% directly related to your business, such as you're a fitness coach and you turn your gym into, or your garage into a gym, right? But that's different. But mortgage payment, property taxes, homeowners or renters insurance, those are all personal first. They are paid for out of your personal bank account, and then we allocate them back to the business through our template called the reimbursement sheet. And we call it the reimbursement sheet because really what's happening is your corporation is reimbursing you for use of your home as a business office. And then there's a few other things that we include on that reimbursement sheet purely as a way to be a catch-all for things that should have been business expenses. But primarily, it's those home living expenses that are personal first, and the company reimburses you for them through the tax return preparation and saving on taxes. Those are your expenses, not the corporation's expenses. And then the corporation is reimbursing you for them. So what happens when we start mixing personal with business transactions through our business bank account? Because we're a small business, accidents happen. We might accidentally buy something personal when it should have been on a business account instead of a personal bank account. That's fine, as long as that is the exception and not the general rule. We have a way to code that. We code those as dividends. But what's going to happen if you're in an audit and an IRS agent starts to go through that dividends account or category and sees lots and lots and lots of personal expenses being charged from your business accounts? Instantly, as an auditor, I'm going to say this person's not following their own standard operating procedures. They're not acting like a corporation. Therefore, I'm not going to treat them like a corporation. I'm going to treat them like a sole proprietorship. Well, in a sole proprietorship, there's no difference between you and your business. And so I'm going to want to see your personal bank accounts. I'm going to want to see all these personal transactions in your personal life and not just the business life. Because I want to see now, if you're mixing personal and business in your business bank account, I'm going to instantly think you must be mixing personal and business in your personal bank account that is not attached to QuickBooks. And now I'm going down this rabbit hole, and I just significantly increased the audit time again. And so again, your audit went from a $2,000 audit bill to a $5,000, $10,000, $15,000 audit bill, merely because you kept swiping your personal debit card or your business debit card to cover personal living expenses. You're paying your electric bill with your business debit card. And so that's what the auditor is going to think. He's going to think, okay, well, if you're using that business debit card to pay your personal electric bill, then how likely is it that you're receiving revenue in your personal bank account that should be business revenue? And now I'm going to go down that personal bank account. Every single time you get a deposit from somewhere else, I'm going to want to see proof of that. And so suddenly that gift from grandma for your birthday for $2,000, because there's no record of it, I'm going to say that's business income, because you can't prove that it's not. And unfortunately with the IRS, it's guilty until proven innocent. And so if I say it's business income, you now owe taxes on it. All because you were swiping your business debit card to pay your electric bill. Standard operating procedures are in place for a reason. And the more you follow those standard operating procedures, the less risk you have in an audit. And now I admit the chance of an audit is low, but there are a few tweaks that you can make that really don't cost you a whole lot of money in the long run, that if you do get that audit can go smoothly, or it can become very expensive and painful. Everything you're paying me to do is to represent you in an audit. You could be as aggressive as you want to be by filing your own taxes. You could whip out a PDF, throw some numbers on it, and send it in and say, hey, look, I made no money. That's fraud, right? But you don't hire me to save you from fraud. You hire me to defend you in an audit. And that audit defense is based on case files, which primarily come from your accounting records, which follow certain procedures. And that number one procedure is robust and properly kept accounting records, with number two being we separate personal from business. That's what will defend you in an audit. And that is what will save you the most money if you get audited. And they are just small tweaks that, one, you can pass off to a professional bookkeeper and just pay them and not even worry about it. And the other one is just being cautious of which debit card or credit card you use when you're at the store, or when you set up an account to pay a utility. That's all it is. And if you make those small tweaks, that can save you $10, $15, $20, $30, $50,000 or more in taxes and fees. So just keep that in mind. I'm seeing lots of violations of these two things as we're getting deep into the taxes. And the biggest thing that we're seeing is clients saying that they were going to do their own bookkeeping, and now it's crunch time and bookkeeping is not done, and now they're pushing it on us. And I'll tell you what, there's a premium to pay if we're in the middle of extension deadline season and taxes are due in a month, and you're saying, please do my bookkeeping for me because I didn't think about it all year. There is a premium you're paying for that. Because we need to focus on tax return preparation, not doing the bookkeeping you told us you were going to do. Anyway, so that's what I have to say today. I hope this is beneficial, and I'm putting the fear of God into you to do things correctly. And if you're thinking, oh, great, Jason's talking specifically to me, I'm telling you right now, you're not the only one. I'm doing a video because this is a common problem we are seeing through multiple clients, and I'm just addressing it in a mass form to try to help people understand how important this really is. Again, I know it's really not important to you in your everyday life. I don't look at my QuickBooks every day. I hardly look at my QuickBooks, and I'm probably my own worst enemy. And so this is definitely an example of do as I tell you and not as I do, probably, because I'm probably my own worst enemy in this situation. But I'm also the CPA that understands that, just like you're the expert in your own field that understands what you do and you're selling your services to somebody else. You know, we're all experts in our own fields, and that's why we work together and we hire each other out for different things, right? You hire clients that you're helping, you're my clients, and I am a customer for other people, because we're all experts in our own way. Anyway, have a wonderful day, and I hope this is helpful for somebody.